All right, what's going on? So somebody said they like when I do my breakdown videos. They learn a lot, whatever. I haven't been doing any breakdown videos in a while, so I thought I'd do a breakdown video. Even though I've been taking trades, I thought I'd do a breakdown video today. Okay, so let's get right into it. All right. So as you can see here on the screen, the breakdown video is going to be on CAD JPY. All right. So before I get to the breakdown, I trade all yen. I only trade yen. Whatever any pair that involves yen as the quote pair, that's the pairs I trade. So because all the yen pairs correlate with each other. So if GJ is selling, then CAD JPY is going to be selling. Euro JPY should be selling, and everything with JPY as a quote pair should be selling as well, right? So what I like to do, I'm gonna trade all of them at the same time. What I like to do is just trade on whatever pair looks better with yen as a quote pair. All right. So in this case, I was looking to buy GJ and I was looking to buy CAD JPY. All right. So this is okay. Let me get to what this is. I'm in the Discord with this is Dr. Dollar's Discord, right? So I'm in Dr. Dollar's Discord and Dr. Dollar streams or whatever. So I see my market analysis inside Dr. Dollar Discord called Charts for Streams. So I send my analysis in here. So this is where I'm following my analysis at, right? So here, this is what I was looking at for GJ, right? I was looking to buy above this wick, bring stop to break even above this high, and to hold the position all the way up, right? But as you can see, we got a little bit. It's a little choppy right here. And you got this minor resistance level here, right? And at the same time, I see this. I see this as well. I seen this as well, right? And this was CAD JPY. This is the trade I actually took. You feel me? This is my exact entry, my exact stop loss, my exact take profit level, right? But as you can see on this one, this pair is JPY as well, but as a quote pair, but it has a lot more cleaner traffic to the left hand side than this pair did. That's why I took this trade instead of this one. They both overall ended up flying to the upside, but this one was a lot faster. Not only was it faster, it was a lot less stressful because once I went in profit, I was in profit. For me, I wasn't in no consolidation period or nothing like that because of the clean candles to the left hand side, right? But this is the proof I actually took the trade in live market. You see here the time for the candlesticks to close and where price is actually at, right? And this is me still within the trade. TP2 was hit. At TP2, I closed 90% and leave the remaining 10% as a runner. Okay. And here it is now. This is the current market now. Boom. This is the exact trade right here. All right. Now I'm gonna get into what I saw, and I'm gonna do the breakdown. All right. So let me add this pair here. CAD JPY. I already used it on the chart. I need a different chart. Okay. So when I got on the charts, it was around 1:30. So let me put on borrow replay. Rewind to around 1:30 a.m. Let's go to 1 o'clock. Okay. 1 o'clock. All right. So what? This is the chart breakdown. Start off on a 4-hour time frame, right? Once I get in a 4-hour, the daily time frame, I identify my levels. So I start on the daily first. My daily level will be all the way down here. You feel what I'm saying? But this is too far away from price. So we skip the daily, go down to the 4-hour. Where will my 4-hour level be? Somewhere down here. Okay? Identify my levels first. Boom. Let's keep going. 1 hour. I like this. Impulsive push off of here. Got a rejection, rejection, and rejection. Alright. 30 minutes, so on and so forth. I like these rejections right here. Rejection, rejection, rejection. This is where I see price coming to. Okay? Where was my entry? Oh, I didn't get there yet. I got on at 1:30, 1 o'clock. What time is this? 1 o'clock. All right, this is what I saw. Right, I identified my levels. Got my 4-hour level down here. Okay. All right, how I mark my levels is I like to mark my levels where there's clean traffic to the left hand side with major rejections, multiple rejections, and big reactions off of those rejections. So as you can see here, after we got this rejection here, we got a big reaction to the upside, right? Got this reaction here, we got a nice rejection, a nice reaction to the upside. Then right after that, we broke below, right? Got a little consolidation here, got another rejection here. Once it tapped into here, boom, big impulse move, right? And same thing with the 1 hour, my 1 hour level, right? So how I got my 1 hour level, we tapped in right here, big impulse move to the upside. So what I'm saying, so on and so forth. We tapped in right here, big impulse move to the upside once again, right? So now at this, wait, no, let me go back down here. Yes, okay. Now at this current state, this is where I have my levels at. Okay, I'm like, we're in pre-London right now. We're creating higher lows and higher highs. You feel me? Well, actually we're in this range, but within this range, we have this, the starting push here. This my first higher high, and then my higher low right here. For me, hoping to create a new higher high, right? Because I'm bullish. For the simple fact that we this is why I'm bullish. We made this lower low right here, lower high, lower low, lower high. This low barely broke this low, so and then we made equal higher highs here. I mean lower highs here, right? These are equal lower highs. We made another push down, failed to break these lows. Because we failed to break these lows, and if we break these highs, this is a change of character. So if we break these highs here in my head, I'm no longer bullish. I mean, I'm no longer bearish. I'm bullish. So as long as I'm under this level, I'm bearish. But once I go above this level, I'm bullish. Okay. And also, if I take my Fibonacci tool, take it from this wick to this body, we had a point in between a 0.50 and a 0.618 rejection here. You feel what I'm saying? This rejection, got this rejection, and price pushed down. So because we got this rejection already and price pushed down, I don't expect price to come back up within this area. Alright? According to the Fib. Right? If price come back up in this area, then that means we're starting to range. We created a range. And that's exactly what happened. Right? So price pushed down, created this lower low right here, lower high. Price made equal lows and then made equal highs, making this a range, right? So I'm like, okay, now we're in the range. If I break out of this range, I got clean traffic to the left hand side for buys to fill in all of this right here and potentially to continue up, right? So at this point, I'm looking for buys. If I'm looking for sales, I'll be looking to sell below this level here, right? So in my head, I'm looking like if I break above here, I'm buying above here. If we break below here, then I'll be looking to sell below here, right? Now this could be a potential rejection area, right? Because you got rejection there, rejection there, rejection there, right? But the reason why I don't want to trade below here, because this range is too choppy. This will be a no trade range for me. This is only a 30 pip range or something like that. That's a decent range to trade in. But for the simple fact that it's like choppy right here, then we got a break out and a break back below, then a breakout and a break back below, then it's just clean all right here. Like it's too choppy for me. I don't want to trade within that choppy range. Feel me? There's too many levels that price could potentially reject off of within this range. So I don't want to be in that. This is clean. This above here is clean. All these candlesticks are clean, right? And below here it's pretty clean. Feel me? Got this little potential rejection here, but other than that, we're clean. Right? So this is what I saw. At this point, I'm in my head like, let's wait for a 30-minute candle to close above here. Alright, so play the next 30-minute candle. Boom. Alright. This 30-minute candle close above here with no bottom wick. Now, because it had no bottom wick, it's two different things about trading candlesticks with no bottom wick. It's either it could be an indicator for a strong bullish trend, or the next candle could fucking rip down to create a bottom wick. But this 30-minute candle was in confluence with the 1 hour candle. So the 30-minute candle had no bottom wick, but the 1 hour candle closed with the bottom wick. So yeah, so the 30-minute candle closed with the bottom wick, the 30-minute had no bottom wick. So at this point I'm basing my trade off the 1 hour. You feel what I'm saying? Because no bottom wick on 30-minute, it's telling me not to buy exact. I want to see a bottom wick. But the 1 hour candle already showed me the bottom wick, and the 30-minute is closing in confluence with the 1 hour's close. They both are closing at the same time. If I'm talking too fast, slow the video down. I can't help it. Alright, so at this point, I waited for the next candlestick to create a bottom wick, and then to start to push down and take an impulse entry as it after it creates a bottom wick and flips bullish, right? So in other words, if this say fuck, let me draw this out real quick. Say my next candlestick was like this. Like it was open up and it was breaking down. Then it flipped bullish. Turned blue. And it also had that bottom wick like so. My entry was going to be at the break of this high here. Let me zoom in so y'all can get a better view. See something like this happened. As this candle opened and it started, to rip down. Say this is a live candle and it's open, rip down. And as soon as it flipped bullish, it go from red to blue and break the wick here. This is my entry, right? So I was entering off the next candle flip after create a bottom wick that flip bullish. That was my entry, okay? So that's how I like to enter the market, to enter my trades, okay? So let's just say I entered at this candle's wick, 25 pip stop loss, 75 pip TP3, 100 pip TP4, okay? Say this is my trade, right? Let me go and get my exact entry. 1 second. Watch this. KIGPY. My exact entry was 105,099. 105,099. This is my exact entry. Let's get back in the bar replay mode. Back to where we were at. Boom. Alright, this candlestick here. The next candlestick is my entry candle. Boom. Okay. Now at this point I'm in the market, I'm in profits. Now this is how I base my TPs off of. Right? I always set my template to a 1 to 3 or 1 to 4. And I always have a 25 pip stop loss. No bigger than 25 pip stop loss. I may lose stop loss less than 25 pips, but if my max stop loss is 25 pips, okay? Now, if it's like 27 pips, 28 pips, I'm not taking that trade. I'll just wait for a better entry. Okay? Now, at this point, I'm a few pips in profit. Whoop-de-whoop. Like 22 pips, 23 pips in profit. Now, you have to have a plan to enter the market. Not only that, you have to have a plan to exit the market, right? So, this is how this ties into my risk management plan, right? These are my targets. I always target my first TP is always a 1 to 1. So 25 pips, 25 pips. This is my 1 to 1. Okay. I never close for my 1 to 1. As you see, I cut my template here. Set my template. Click it there. See, it say right here, TP1 brings stops to break even. Meaning every time my TP1 is hit, I don't close any profits. I just bring my stops to break even. That way, if it reverses to come back to my entry, I lose none and I look for a better entry. Simple. Right? I never close any profits at TP1. For the simple fact that if I close, say I close 50% at TP1, right? Boom. I close 50%, then it comes back to my entry and I'm risking 1 to 1, right? And I close 50%. It comes back to my entry, stops me out at break even, boom. I'm only up 0.5%. I take another trade and I lose that trade with the same risk management for a 1 to 1. And I lose that trade without hitting my TP1. Now I'm down 0.5% on a day instead of up 0.5% because the trade I actually closed partials on was only 0.5%. And the trade I lost on, I lost a whole percent. Simple basic math. That's why I never close 1 to 1 because if I take a trade and lose a trade, I'm going to be in drawdown for that day. If I take 2 trades, if I win 1 and lose 1, I'm going to be in drawdown because my loss was bigger than my win. Okay? That's why I never close that 1 to 1. I'd rather just get broken even. Right? My 1 to 2 is always, my TP2 is always a 1 to 2 for my entry. So my TP2 is always 50%. 50 pips for my entry. Right? Now this will be my TP2. right? And now at this level, this is where I tend to take my partials. I'm at close 50% at TP2. If I close 50% at TP2 with a 1-to-1 risk to reward, that means I'm closing an overall of 1%. So if it reverses off my TP2 and it comes back down to my entry, I close 1% in profit by closing half of what my overall position was. Now I'm up 1%. So if I take a loss after this trade, then I'm back at break even for the day and not down 5% like I would be if I would have closed at TP1. Feel me? Now TP3 is always 1 to 3, so on and so forth. All right, TP3 75 pips. Feel me? At this 75 pips, I closed 90%. Now my runner. Now I just have 10% of my overall lots running, and that's my runner, 10%. So say I entered with a standard lot or something like that. I'm just saying standard to make the math a little easier, right? So I entered with a standard lot that's 1.00. If my TP3 is hit at that point, I have closed 0.90 and I have 0.10 still running on the table. Feel me? What stops that break even clearly, right? Now at this point I closed 90% of my profits, and I still had 10% running, just floating to see how much I can get out of this trade. Mark up some more levels. That's my risk management plan, right? Oh, let me make this back to support resistance. Nope, not that one. Boom. Another level here. Another level here. So price could easily, at this point, price could easily just bounce off of this, come right down, and then break above. If that was to happen, I would be, if my CP1 gets hit, I'll be so comfortable breaking my stops, break even, get stopped out, break even, and looking for a re-entry after I see another breakout candle, and I see more confirmations to continue up. So if that would happen, that would be perfectly fine. I'll just look for re-entry around, I say entry, give my trade second chance for it to continue up overall, right? But let's just let this trade play out. See, this is where maybe a discipline on my trading plan come into play, right? Because here, it came close to my TP1. It didn't hit it. So I didn't close partials because it didn't hit it, right? I had my alert set, right? Boom. It came close to my TP1, didn't hit it. Came back down to my entry. Now, if I would have closed 50% or something, I would have got stopped at break even. Even though my TP1 didn't even get hit, I would have got stopped at break even. That's why I don't bring stops up until it actually gets hit. I don't care if it comes close to, I don't care if it's next to, I don't care if it's 1 pip away. I'm not closing unless it gets hit. Simple. I would have missed out on I would have missed out on this big push move up if I'd have brought my stops to break even too early without my TP1 being hit. Okay. At this point, we broke above my TP1. My stops are at break even. And my whole position is still in profit. You know what I'm saying? I'm holding it, so on and so forth. Came close. Feel me? Came close to stop me at break even, but I'm strict on my player plan. I had a trading plan. I had a good entry. I'm holding it. Here we go. TP2 coming right up. Boom. TP2 got hit right here. Now we got a little trend forming. Right? Higher high, higher low. Higher high, higher low. Higher high, higher low. Price coming up to make a new higher high. So now I'm confident. I'm confident that my TPs is getting hit. And if we break below this low, if we break back below this low here, this is the previous lower low, we break below here, then I'll be looking to close, because now we're breaking market structure, because on a smaller time frame, this is higher highs and higher lows. Okay? This is my thought process. Boom. TP2 smash. At this point, I done closed 50% of my profit, stopped at break even, and I'm asleep. Nigga, I go to sleep, I wake up, and the chart is all the way the fuck up here. Simple. TP3 sit. Literally, I went to sleep and I woke up. After hitting TP2, I closed my 50%, stopped at break even, and then I woke up. My runner was all the way the fuck up here. Alright, that is the trade breakdown. Simple as that. And literally, the entry I was looking for GJ up here did the same exact thing, bro. I waited for the bottom wick to form for it to push up. Feel me? And this was 1:28 a.m. See, I said it's at 1:28 a.m. And I typed that out. Looking for a bias on 30-minute close and wait for the next 30 minutes to create bottom wick and then flip bullish. I literally said it right here at 1:29 a.m. Feel me? And then if I go on GJ, it did exactly what I wanted it to do. Besides create the bottom wick, so I didn't enter. It's going 30 minute. What else? What time was it? What time I said that at? 1:30? I screenshotted that at 1:30. It's 1 o'clock. This candlestick closed right here. Literally, the way I entered CAD JPY, I was going to enter the same right here. Enter at the flip of the next 30-minute candle. Stop loss just below, or 25 pip stop loss below the overall resistance level, and same exact thing. Literally. Same way I was going to enter this, I was going to enter that. And I also took a trade on UJ, but this one I closed at 1-to-1. Yep, here we go right here. At first, I'm like, this is a no trade range, but then after a while, I'm like, it's 30 pip range, I can trade this range. But this was a lot more tighter than all the other ones was. But my TP did get hit. This one I had a 15 pips I lost. That's why I took the trade, because it was I was already in profit on CAD JPY, and I didn't mind risking a little bit of my profit that I was up on this UJ, because I know all JPY pairs as a quote are bullish. Feel me? With this USD JPY, we got a downtrend here. There's lower lows and lower highs being formed. Now at this point, we got a fucking triangle pattern forming, because we're creating equal lows but not breaking highs. I mean, yeah. We're not breaking highs and we're not breaking lows. We just keep creating equal lows over and over again. We got a break of a trend line and a break of the previous lower high here. Broke above here, came back down to retest it. I took my entry for price to continue up. Now, this position was in Dead Sea drawdown, but only because the traffic to the left was not as clean. For me, you got a lot of rejections to this left hand side. That's why this trade took a little longer than my CAD JPY trade. Because if you look to the left hand side of my CAD JPY trade, for my entry here, look at all this clean traffic. So the move up was a little easier, feel me? Because it is clean traffic, right? Now, on UJ, the traffic to the left wasn't that clean, so it took a little longer to hit my TP. But TP overall hit for 1-to-2, and it's still running. Well, I'm not holding this no more. I closed this one. I'm still holding CAD JPY, but still running on the bull side. Feel what I'm saying? So all my way I was planning on executing all these JPY pairs all worked out nice. I didn't enter GJ. I only entered UJ and CAD JPY. Feel me? And I'm still holding the runner as we speak now. But there's the breakdown. Boom. Start to finish. I identify my key levels. I talk about how I entered. First thing I do, I identify my key levels on a higher time frame and scale down. Then I get my entry reasons. Well, my two buys, where I want to buy it and where I want to sell it. Right. Once it get to that area where I'm looking to buy or sell, above or below, I wait for a candlestick to close and then wait for the flip of the next candlestick to flip in my direction after a bottom wick or top wick is created. I execute my trade, enter stop loss just below the previous candle's wick, or 25 pips stop loss. No more than 25 pips. If it's more than 25 pips, if this wick is more than 25 pips, I will not enter that trade. Simple. And while in the trade, I have, just like I have a plan to enter the trade, I have a plan to get out of the trade. So if it breaks this low here, I'm closing 50% in drawdown. If it comes back to my entry, I'm closing half. Whatever. Once my TP1 get hit, brings down to break even. TP2 get hit, close 50%. TP3 get hit, close 90%, leave a runner. Like, I have ways to, just like I have a plan to enter the market, I have a plan to exit the market as well. That way, I'm prepared for whatever the market may show. I have a plan to scale in. I have a plan to, From the way I scale in, I'll take my 52, draw from the high to the low, and if I see a 0.618 rejection or something like that, and at a level of support or resistance, then I add a position there, so on and so forth. You know what I'm saying? So yeah, I got a way to enter the market, I got a way to get out of the market, I got a plan to risk management and all that stuff. And this is what you need, in my opinion, to be a successful trader. And just put it like it is. You just need a plan. You need a way to get in and get out. And let your runners run. Don't be scared to hold your trades. I know everybody, I'm a scalper. I only want 10, 20 pips. If that's how it is for you, cool. But don't be afraid to close partials and let your runners run. Because half of the time, my runners bring back more profit than my overall position. You feel me? And that's just how it is, because so many pips after my TPs is hit that that could still run. So don't be afraid to close profit and let your runners run, and just bring stops to break even. That way, I'd rather get broken even with a runner and close profits than lose at all. I'd rather get broken even than lose. So no matter what, as long as your stops are at break even, you're good to go. And don't be mad if you get broken even, bro. It's cool. Niggas get broken even every day, cuz. You're not the only niggas getting broken even. I get broken even all the time. Like 2 weeks ago on a Friday night, I got broken even like 5 times. So all them trades was winners. That just shit broke me even and then flew in my direction. It's cool to get broken even. Don't let that shit fuck up your psychology. Like me personally, when I trade, if I get broken even 2 trades back to back, my 3rd trade on that night, I'm taking profit at TP1. That's just how it is. So you gotta just take what the market give you, or whatever. Don't be scared to hold your positions and have a plan and adapt to market conditions. Like I got broken even 5 times in one night, nigga. And then after that, my 6th trade, I was on Dr. Dollar stream and shit. I'm like, yeah, I'm taking profit this time. I'm not letting that shit happen to me again. It happened to me 5 times already. I should have been took my profit. The first after it happened to me 2 times. So after that day, I developed a plan. Like if I get broken even 2 times in a row, the 3rd trade, I'm taking profit. I'm taking the whole position at TP1. That way I can be up on a day, because taking 3 trades in a day, it's cool and all if it's getting broken even, but I don't want to force those trades. You feel what I'm saying? So I created that plan. If the 3rd trade, I'm just targeting 1-to-1 and I'm out and I'm done for the day. Just to end the day in profit. You feel what I'm saying? So keep create a strategy for risk management. Create a strategy to enter the market. Create a strategy to exit the market, and so on and so forth. This is my strategy and how I do it. You could take what you like about it and continue on. And what you don't like about it, critique it to your liking. That's just how it is. It's your boy FX Day, and I'm out. See you.